What's up, party people? My name is Sunny Ray. This is the Sunny Ray Show. We're back. I think this is our second or third interview for the day. We've got a crazy week. I kind of still can't believe I get to talk to all these awesome people. Today's guest, his name is Nectar. He was the first BD or sales hire at Google Montreal, which is wild. He's running Amaral Ventures, which is a Montreal-based venture fund, seed focus, built to lead, not follow. So with that said, I'm going to bring on Nectar. Nectar, how's it going, bud?
I'm doing well, Sonny. Doing well, man. What about you?
I'm feeling pretty good. I just got back from a trip to New York. Took the little ones out there for the first time, actually. So yeah, they're still buzzing from that one. It was a good weekend. So tell me, what's Amaral Ventures, and I guess why should someone care?
So first off, thanks for having me on, man. Excited to chat. I really like what you're doing with your show, Sunny. So what's Amaral? Like, we're a venture capital fund. We invest in startups, and our focus is really the country. So we invest in Canadian-based companies. We think there's not enough money in Canada, particularly in for venture capital specifically. So we want to lead rounds or co-lead and help startups basically grow and scale.
Wow, that's inspiring. I like that a lot, especially being, a Canadian. So talk to me. I guess you were the first business development hire at Google Montreal. I wanted to just, I don't know, ask you about that. Like, well, what did watching, hyper growth from inside of a giant tech teach you that, you couldn't have learned anywhere else?
And it feels like a few lifetimes ago. I got hired in 2011, right? So 15 years ago, when I started there. And so, like, I started my career in like digital marketing. I got good at growth online, like SEO, SEM, social media. So it was super fun to be an operator. And then, I transitioned from being good in Excel to being good in PowerPoint, working in sales at Google. And while I was there, obviously it was a growth time for the ad side. Where we were just like scaling like crazy, and because there was this huge shift from traditional media to online media that was happening at that time. So I got to see the inner workings of Google at that time, and travel the world and talk to a lot of big brands, and but it was still an employee, so it was fun. And while I was there, I also started doing some angel investing on the side, more to learn about startups and how startups work, how they operate, and try and contribute back a little bit with my expertise. So yeah, it was just a super fun period of my life.
You were also mentioning that you're big into Brazilian jiu-jitsu and you like choking people out. Just wondering, I mean, how does that tie into your kind of, what's the through line with all of this? I mean, I'm a big fan of. I've never done Brazilian Jiu-Jitsu, but I watch a lot of it. Maybe too much.
Do you have a practice? Do you practice any martial art, Sunny?
I've done Taekwondo growing up. That was like the one that I excelled at the most. But Brazilian Jiu-Jitsu, I got through maybe one or two introductory classes, both of which were, like, I mean, not unpaid. They were just like the ones you walk in, and I learned more in that, 15 minutes than probably my 7 years of Taekwondo. It was pretty eye-opening.
Yeah, no, it's pretty humbling. I've been doing it for a few years, so it's fun. Like, the time for work for me is that obviously it's a thing I do outside of work, but there's definitely some similarities about just like learning grit, resilience, and like being able to like suffer through problems. It's also a very technical sport, so it's like human chess, right? You're like, there's an infinity possibility of moves, right? So you're constantly learning. So I find it's very close to my personality. It's like, they just try and problem solve under duress when you have someone that's literally trying to tap you out. So I find it's a great sport. There's also a sense of camaraderie that's built right within your club, right? Because you're training with people. You're not literally trying to kill each other. There's like, of course, the whole goal of the sport is to make your partner submit, but I find it's done in a way where you're still trying to learn. And if you're better than someone, you're going to try not like go 100%, and vice versa, right? So if you're not as good when the person you're facing, you can sense that they're also trying to learn at the same time. So yeah, super fun. Obviously not at all related to tech, even though there's a lot of tech people that's now starting to get into it. But I find it's a fun part of my life as well.
That's awesome. I like the 4D chess or 3D chess analogy. So I was gonna say, so 8 years running the PNR advising on strategic planning and M&A. Like, well, what pattern did you see across those engagements that made you want to take the risk yourself, right, instead of just advising on it?
Well, maybe to step back. So like I left Google and then I started this consulting firm called PNR, which was short for point of no return. And the idea behind a consulting firm, when I was me and two co-founders when we started in 2015, was like, oh, there's all this, big shifts in technology that are happening, but big companies haven't yet figured out how to adapt to this new reality. So we're like, oh, there's this thing called management consulting, seems to have good margins. Let's try and do that and help companies. And what we quickly realized that a little bit naively, it's like, oh, like, Air Canada and BMO and big enterprises are not going to hire three guys in the basement, right? Like, because you have to work with CEOs. That's really the job. So our initial focus ended up being really more tech companies, which was our backgrounds. So working with smaller tech companies as our first customers, right? So what we end up doing for our customers was something called strategic planning. And it was done in a very kind of like old school way. It still is to the most part, like PowerPoint, Word documents, etc. So we built a platform to help companies track the execution of their plan, just using like the basic methodologies from Agile, from Scrum. So this is like 2015, 2016, right? So back then it was a bit of this wave of Agile in the world of management. I want to say we're a little bit at the forefront of that. And we got even though we're selling a software, we're still very much wasn't pretending to be a SaaS. We're still very much professional services, but with a cool, neat, recurring revenue model, and still partnering with the CEO and boards. And like the job was like boardroom drama, help us figure out a lot of drama that was going on with management teams. So a lot of the lessons we learned, at least I learned, yes, there's all the business side, but a lot of it's around people and how you align people and how management teams, how CEOs work with their boards, how CEOs work with their leaders that report to them. So super fun job. I find it's like my school of where I've learned about business, to be frank.
Oh man, that's really, really interesting. And then speaking of people, right? So you've interviewed 250 plus founders and investors on Flagship, right? Formerly what is it, the point of no return? So what's a question you ask almost every guest that most interviewers skip?
So I've been podcasting for 10 plus years, starting in 2016. And the idea behind it was, I'm starting this management consulting firm. How do you promote this like kind of very commodity type service? Like, we'll start podcasting. And we were talking to all these like interesting CEOs, investors, founders. Is like, let's just interview them and create material for our brand, right? So it was called Point of No Return, which was like simply the name of my consulting company. And I've kept it up. I've just rebranded it from Point of No Return to Flagship, which is Amiral, the name of my fund in English. So maybe I'm not good with this brand thing. And it's been really fun. I find there's been so many lessons. I have some of my, my go-to questions, like trying to understand the difficult time in a person's life, particularly career-wise, and how they were able to overcome that kind of a challenge, right? So just difficult decision making, right? And maybe that can be an interesting thing that an audience member, someone running a startup, can learn from, right? So I find trying to get into tough times, and sometimes it's not fun to revisit tough times, but I find it's good. There could be some really good lessons. And then on the personal side, it's been super fun. It's like a niche podcast. Like I don't have that big of an audience, but I keep doing it really because you learn so much. You build a cool network of people. And then on the business side, it helps promote your company, right? So you kind of stand out. I really believe in this notion of like every company is a media company, and now it's becoming like every person is a media company. So I find for me that's been my thing. It's like doing it. So I don't think everyone needs the podcast, but I think everyone needs to find their creative outlet, their creative expression for their work. So for me, that's been the joy of podcasting.
Yeah, it's a great way. I mean, obviously, I agree with that as well. So Admiral was built to address what I guess your co-founders called a lack of leadership in Canadian venture capital, right? So what's the specific moment that crystallized that thesis for you guys?
Well, we've been really like focused on this gap that we see in the Canadian market, specifically around funds leading rounds. There's quite a few. There's really a ton of good funds that we look up to that are here, like Inovia, Georgian, Radical, White Star. There's just so many, but just overall, there's a huge lack of capital. There could be 10x more, really. And the stat that we see is something like 2/3 of seed and Series A rounds are led by foreign investors, which is a pretty sad metric, right? Because basically all the best people are leaving to go to the US, right? Either they're starting their companies there, or the first inconsequential round of financing is being led by a foreign investor. And I'll always say it's the founder should raise from the best possible investor. So we're trying to create an alternative to like I said, to these foreign investors that are stepping in by building a founder-led, founder empathetic fund that strives to create as much value for the founder, but also gets out of the way if we need to, right? So really just trying to be a tier 1 VC, but based here in Canada.
That is so inspiring, man. And that's not to talk too much about myself, but I started a company as well, right? Where I ended up raising capital for, and a lot of that capital is in the United States as well, like you rightly said. But I've always wondered as a Canadian, though, is when is Canada going to close that gap, right? And it's awesome that you guys are thinking about that. So I guess why enterprise AI, robotics, supply chain, and manufacturing specifically? What do those sectors have in common from kind of where you sit?
Well, part of it, to look at the what's the expression, right? To skate where the puck is going, right? Sorry if it's a bit cringy at this point, but to say that expression, but I think it's that's where we see a lot of opportunities for startups, founders to build in, right? And then part of it is what we're good at, right? We're our own experience. My partner Fred, we're 3 co-founders in Amiral, me, myself, Fred, and Dom. And Fred has built a really cool AI company in the industrial space that he sold. So we have that expertise and kind of an insight as to the technology what buyers are looking for. And then we feel that this coming wave in those areas specifically, right? So maybe if I take a step back at the broad thesis that we'd like to think at is this notion of resiliency for companies and for governments. What we're seeing at the macro level is it's kind of playing out right now in real time is this fragmentation at the geopolitical level, right? So as the US retrenches itself from a trade perspective, really trying to go back and being more isolationist, like something it was doing 100 years ago. That is something that a lot of countries and companies have to adapt to, right? And we think the best way for them to adapt is with using technology, right? So that allows technology to bring reshoring back, so advanced manufacturing, advanced robotics for every single country. So, and in Canada, we have some really incredible talent on the technical side, but also knowledge as to on the natural resource side, on energy side. So a lot of these areas that are going to be impacted by technology, we're going to be able to create startups that exports this know-how to basically the rest of the world, right? So we have this natural advantage because of where our economy, right? That's very natural resource focused. But that's creating opportunities, right? So that's kind of where our macro thesis sits. So naturally, obviously, the buyers for this type of technology are more enterprises, right? So that's how we look at the world today.
That's awesome. So Amiral, am I saying it right? Amiral?
Amiral, exactly. Yeah. And it's obviously a French word, like I said. It means flagship in English.
Interesting.
I.e. the name of the podcast, right? So Vaisseau Amiral. So it's the idea is we need to build more Canadian tech leaders here. So that's what we call the fund Amiral.
And so Amiral tends to back companies already generating meaningful revenue before you write a check, right? So what did years of advisory work teach you about the difference between kind of a promising story and a fundable business?
Well, maybe one thing to correct, meaningful revenue, we're seed stage, right? So your definition of meaningful is obviously there could be variations, right? So we're really
right.
seed stage. my previous job, I think what it taught me, the biggest lesson is really like I said before, it's really about the people. So when we meet with founders, like that's
Wait,
really the key thing.
Nectar, sorry. So what is meaningful revenue at the seed stage for you guys?
We're
I
like
mean,
we're
is there
looking at below usually below a million in
a
recurring
year or month?
ARR.
Error. Okay.
Yep.
Okay.
So, and then some kind of growth inflection, right? So we're not a pre-seed fund. We're looking at some kind of traction on the commercial side that has removed the tech risk. So we're more about the go-to-market risk. So how do we help the company scale from a go-to-market perspective, having done that in our careers? So hopefully that addresses your question.
Yeah. For sure. That's
And then,
really,
yeah,
really
so
interesting.
and then to go back to answer your question about, okay, well then, what do we look for, right? What have I taught? What is my career specifically in consulting or in advisory, taught me? Like I said, it's really about the founder and the founding team. So we try and then these people can come in all sorts of shapes and sizes, right? So you have to have this really intellectual humility and say it's like, doesn't really matter if they're a repeat entrepreneur or not. Of course, that's one signal, but it's not the only one, right? So, like if you're only doing repeat entrepreneurs, you would have missed out on like Mark Zuckerberg, right? So you really have to have this intellectual humility of like trying to assess the quality of the founder and their grit and resilience, their ability to take a punch and get back up, right? And the quality of their idea, their insight is intrinsically tied to them as well, right? Like, so it's like it's not this notion of like, oh, the market and then the founder. It's kind of the same thing, right? Like what is the founder building, and this notion of founder market fit. And then lastly, it's how well do we get along with the founders themselves, right? Like, do they choose us as much as we choose them to partner together, right? So the best people tend to have options, right? So they're going to be shopping around their investment, and we're selling a commodity, right? Which is a capital. The way we're trying to differentiate, in our value prop is how much can we help the founder along their journey, right? Can we provide a small assistance, right? Because they're doing basically 99.9% of the work is really the founders. But can we be there during a key moment, help guide during a key strategic decision? And these are things that are not mandated in a term sheet, right? That are not in the terms and control. It's really the personal relationship that we develop with the founder. So like when shit hits the fan or there's a big call, are we in the room and trying to help troubleshoot and ask questions? We're not going to be the ones making the call, and maybe sometimes that assistance will help guide towards the right call that the founders wants to make. So ultimately, that's going back to this notion of relationship with the founders. It's kind of a key piece. It's like the expression I like to say is like we want to be a sparring partner when things are going well, and a shock absorber when there's the inevitable crisis.
Wow, that really resonates, man. Everything you're saying is just like, it's just so perfect. So you've spoken publicly, Nectar, about how AI is essentially changing SaaS business models and valuations. Where do you think other allocators are getting that shift wrong right now?
Yeah, this is like the $1 trillion question, right? Like what's going on in the world of SaaS and AI. So a few things. One, I think the markets have overreacted on some of the public SaaS stocks, right? And we're seeing like multiple compression there. Just no one's going to vibe code their own Slack, right? And I just don't see that happening, right? So I think there's been a little bit of an overreaction in terms of the markets. At the same time, the AI shift is like, it's kind of this weird dichotomy where the AI shift is way bigger than I think most people expect. At least most people that are not in tech and VC. I think most people in tech or spend too much time on Twitter probably kind of get that this is a huge thing, but most people outside just don't understand, like, holy shit, the world is really changing over the next decade or two in a really, really big way. But specifically around this notion of AI SaaS, like SaaS is just like itself a business model, right? It's just like recurring revenue. And like a lot of AI companies are going to use recurring revenue as well, right? So I think what's going on right now too is this whole notion of where the real value creation is going to happen is going to be at different levels in the stack, right? So will SAP get disrupted? No, probably not. Like I think a lot of big enterprises are still going to use their system of record, this ERP, but For newer, younger companies, will they go with SAP as their main system of record? Maybe not, right? So I think where this shift is happening is going to be this cool new AI startups are going to really challenge incumbents, but not on the traditional customer, because it's going to be on all new customers that are coming in, right? So like very multifaceted, right? So I'm kind of like bouncing a little bit all over the place, but I think it's interesting because it's very context specific to the industry, the market itself, and it's kind of playing out in real time. We're seeing these massive growth numbers by startups, right? Because you have this like magical tool that they've created, right? And people are willing to pay for it, right? So I think it creates a lot of opportunities for founders.
That's fascinating. Yeah, I might have some background noise. I've got a 2-year-old running around here for some reason. Mama Bear is trying to get a grip on him. So, Hector, as a fellow builder and allocator, like how do you personally decide when a market thesis has gone from like interesting to worth committing real capital to?
Yeah, to be frank, like it's very tough to say, right? Like part of it is just luck, So like we'll take one market, for instance, right now, it's like quantum is super exciting, but it's still very early, right? So being too early is the same thing as being wrong, as they say, right? So I think what we're trying to see is like how real the technology is, right? So I'll give an example of a really cool Montreal company that didn't quite make it a few years ago. It was a company called Element AI and raised a ton of money in like 2018, 2019, right before, the big AI wave, right? Company ended up selling to ServiceNow and investors made their money back, but it's a timing issue as well, right? So when we look at a market, we're trying to see is the technology, how real, how valuable it is. And then we try and get a sense for adoption from customers, right? So, but these things are obviously very tricky because if it's very apparent, then you're probably not in a venture outcome, right? It's like let's say you take AI, trying to create an AI clinical software for dentist offices, right? Like very obvious, it's good, but like probably a lot of people chasing that idea, right? So it's very obvious that there's going to be a market here, but also probably obvious that there's going to be a lot of competition, right? So you have to try and examine the market and say, it's like, is there something relatively unique about this startup itself and what you're doing that isn't apparent to everyone else, right? Like this notion of like small ideas attract competition. Because if it's a very obvious idea, then yeah, people are going to chase after it, and that competition does not lead to great venture outcomes. I'll give maybe one example. We just finished our 5th investment, not public yet, but a company in the space, right? And that's a market that we find very interesting, right? So looking at the space industry, and that's one where we feel there's going to be a lot more startup activity, right? Because it's now just at the embryonic kind of level. Now it's starting to go up, right? Because the cost of launch has gone down radically. It's permitting a whole host of new technologies to be put into orbit. And so we're obviously a little bit bullish on this particular area, but hopefully gives you a sense as like that's one market that we're excited about.
What does a company actually have to prove to you before you're willing to lead its round rather than wait for someone else to?
We don't like. I guess everyone's going to say it's like, oh, we're conviction based, and we make up our own mind, but we really truly try and build our own mind. Like we don't care too much if other VCs have passed or are doing the round. Like we're really trying to independently look if we believe in this opportunity or not, right? And it's the question is, what does the company actually have to prove? It's really the founder, right? Like the founder has to convince us that they're convinced. That's it. Like I know nothing about most, like what they're doing, what the startup is, or tech, kind of teasing. But it's like if we believe the founder believes, and they're like, listen, like the train is going, and I'm gonna build this company to huge and have a huge outcome. That's what convinces us, right? So there's this notion of storytelling that's quite important for founders that we like to talk about too. It's like, are they able to tell a compelling story and vision at that early stage where there isn't that much numbers in a P&L to examine, right? So yes, of course, we look at the numbers, but that's not the fundamental analysis, right? That let's say a later stage investor would be doing.
Where do you think the next wave of value gets created in supply chain and manufacturing as AI matures?
Yeah, I think it's a good question. So there's so many different areas, right? So I think some of the easy ones that are happening right now is this whole notion of making things that are making them more legible in the supply chain and manufacturing space. So things that were not able to be read, to be dictated. So that goes from the quality of the machine, like downtime of machines, throughput of different processes. AI is enabling for this real-time analytics, right? And being able to do more and more predictive work on that side, right? I think eventually what we're seeing, particularly with improvement in hardware, is the overall process itself shifting, right? So the robot factory, so to speak, right? So we're seeing it obviously with some like really advanced hardware companies, like particularly like Tesla, SpaceX in the US, but a lot of Chinese companies as well. They're really building this next generation of factories. So this is enabling a whole host of improvements as well, right? So being able to manufacture widget X 10x more effectively, right? So it's a multiple layers of the stack. I think the first one is just making traditional factories more legible, but the next one is just building the robotics factory right from first principles.
Cool. All right, man. So I guess help me land the plane. I got one more for you. I mean, I have actually 20 more for you, to be honest. I'd love to have you back on this show, dude. Like I said, I interview like 4 or 5 people a day, and like everything you're saying, I'm super just clinging on to every word, and I have a lot of questions on the once we end this stream for you as well. But what's one thing you believe about kind of like where AI and robotics are headed that most of your peers in venture would push back on?
That's a good, the contrarian question, right? Like, what do I believe? I think it's just gonna take a bit longer than we imagine, right? I think especially for like your personal robot to come, I still think we're a bit of a ways away. It's not going to be in the next 2 or 3 years. So at the same time, we're seeing a lot of investment in robotics, which is cool. I think the hardware is still a little bit of a ways away. I think it's going to happen clearly. I just think the time horizon is a bit longer than most people expect.
Where do people learn more about you? Where do people learn more about the fund? Social media. Maybe just share that, and then we'll bring this one to an end.
Yeah, sure, man. We have our website, amaral.vc. So you can check out like our website, or just follow me on LinkedIn or on Twitter. On Twitter, I'm at Nectarios. I've been tweeting for too long. I still call it Twitter, sorry. And like happy to connect. Send me an email, LinkedIn, etc. Happy to chat.
Awesome. Great. All right. Thank you all for tuning in live as well, and everyone else in the future. Until next time. Cheers. Nectar, hang out for 1 minute. I'm going to bring this to it.